And welcome back. Bruce Porter joins us now for this week's Dollars and Cents segment, sponsored by the Resource Center. Good to see you again.
Good to be here.
You know, this is the time that everybody's going, because it's tax time.
Tax time, yeah, it comes around every year about this time.
Does it ever?
Yeah, that's true.
Yeah.
What you got for us then?
Hey, we get, we get 3 extra days this year.
Which is
So
helpful.
we have till the 18th to file taxes. And so, a lot of people around the time they're filing their taxes, they call saying, hey, my accountant told me to do an IRA, so I need to do that. And that's actually a good way to put away money. There's no minimum, maximum. You can put money in an IRA, and it's going to proportionately save you some money on how much you owe, or it's going to increase your return.
Yes.
So, if you're in a 12% tax bracket and you stick $1,000 in your IRA, it's going to save you $120, or it's going to get you an extra $120 back. So when you think about that from the financial standpoint, that's a pretty good return on that $1,000 investment immediately. Plus you get growth and the compounding and all that. So this time of year, taxes are always on everybody's mind. So if you need a deduction and you need an IRA, you have till the 18th to get that done. So make sure you do that if you need to.
So
now,
the cutoff isn't like December 31st.
That's what everybody thinks.
That's right.
Yeah.
That's right. You can make a contribution for 21 up till the day you file your tax return, or April 18th. Now, if you file an extension, though, and you want to make an IRA contribution, you have to make that contribution before April 18th. So even though you're going to extend out a few months and worry about it down the road.
They don't let you extend everything.
Same way on your Roth. You can make Roth contributions. You can make a contribution to your IRA, get a deduction for last year, and then you can turn around and convert that to a Roth. Now you're going to have tax implications on that, but that's the backdoor Roth concept, and you can fund the Roth that way, or take your old IRAs and convert them to Roth. But you got to have the taxes all in mind when you do that.
There are maximum amounts you can do on those. Is that right?
Well, not really. So let's say you got $20,000 in an IRA that you've accumulated, and now you've been hearing all the good stuff about a Roth IRA. So now you want to take that $20,000 and make it a Roth. What you got to be willing to do is absorb that $20,000 as unearned income for this year. So it could raise your tax bracket, or at least you're going to have tax exposure on that.
You're subject to tax, so be ready to cough it up.
But so you can. That's the backdoor Roth, because if you're under age 50, the most you can put in an IRA is $6,000. So if you're over age 50, $7,000. So what if you want to put away $10,000 or $15,000? Well, you can't. But say you want to put $15,000 in a Roth, you can't. You're limited to those maximum contributions. But if you have old IRAs, you can convert those to a Roth. And so that's kind of that concept. Gets a little confusing, so I advise you to call a financial person and navigate all of that.
Talk to an expert. Yeah. Well, what is an in-service rollover?
So I brought that up because this time of year, under current conditions, people are worried financially. It's the unknown of what the market's going to do, things like that. And we've all heard from the past, billions of dollars was lost in 401ks due to the market correction of 08.
Yeah.
Right? Well, when you think about that, if you're employed, and let's say you're older than 59 and a half, all right? You have the ability to say, hey, I'm a little worried about the way the allocation of my money. Largest retirement account is usually a 401k. I'm a little worried about that, and I don't have a lot of choices. So you can stay employed, stay contributing, and after age 59 and a half, you can roll. It's called an in-service rollover. You can roll that to an IRA and have a more conservative, more secure path and more control, and still be employed and still continue to contribute to your 401k. So an in-service rollover is a technique that we use to secure large amounts of money that you're worried
about.
could disappear while you're working 9 to 5. Maybe your 401k goes down because of current events. And if you're worried about that and you're old enough, there are some options to consider.
You said the magic word, technique. People like him know those techniques.
Yeah,
I know.
People like you and I, we need somebody like him to explain the techniques.
Yeah, that's what I'm here for.
That's what he does. All right, if you have a financial question for Bruce, visit his website, resourcecentereaton.com, or give him a call, 417-882-1800. Thanks
Sounds
for
good.
coming in. Happy tax season.
Yeah, see you next week.
We'll be right back.